Hey everybody, welcome back to Swing Trading. My name is Mike Fairborn. It's good to be with you all today. Hey, I want to take a look at the markets today and break down specifically, that swing trade time frame and really try to identify how Fibonacci's can be of key interest to us there, and maybe even identifying some interesting levels that oftentimes stocks will bounce at when they are forming that swing trade potential setup. So I want to take a look into that. They could be very interesting in terms of direction they can provide us, the magnitude of the trade that might be expected as well. So we'll dive on into that. Welcome all of you here. We've got Paul, Andrew, Scott, welcome, as well as Steve, Will, Riceberg, and Greg. Some new names in there, folks. If you are interested in our discussion with swing trading, we'll talk about that just in a little bit more detail here, what a swing trade is before we dive into our discussion today. But with that, I do want to start off with some disclosures so we can get the show on the road here. So let's do that. Information here is for general information purposes only. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. Although, we do have some options, mentions of options there. We'll be really looking at stock trades today. Although last week we hit options pretty in-depth. Stock trades today. The paper money software application is for educational purposes only. Investing does involve risk, including the loss of principal. Now, there's no guarantee that the execution of a stop order will be at or near the stop price. Very important, because in this class, we do sample example type trades in paper money. Past performance is no guarantee of future results, and dividends are not guaranteed. Final look here at our slides. I wanted to state that futures and futures options trading does involve substantial risk, not suitable for all investors. We do take a look at futures charts in this class. And now as we take a look at swing trading in general, there it is. Every single week we pull it up. You'll see it right there. That is the bull flag. You can kind of see that bull flag formation over here off to the right-hand side. Oftentimes there are price patterns that will fit in to a short term, that is, folks, days and weeks kind of formation. And when we're looking at swing trading, oftentimes we are looking at a 3 to 14 day time frame. Basically, just 3 days up to maybe, getting very close to 3 weeks. Oftentimes, that's kind of the longer end, although some traders will go up to a month's time frame. But what we're looking for in this class is this kind of a pullback and follow through. So really, whatever, actually, with the bull flag specifically, but whatever sort of a swing trade we are focused in on, we're trying to get indications and expectations using indicators, volume, price patterns. Today, really a key point that ties into price Fibonacci's. But whatever we're looking at, all these different tools to try to give us an idea that, hey, this is an interesting phase right here. And then we might see that follow through right here that might be somewhere between 3 and 14 days. We're really just trying to look at the strongest points in the market. Wanted to highlight that for those of you that are new. Good to have you here on board. And I do recognize many of your names, but yeah. Also, flip it upside down. What do we have? We have the bear flag. Very, very similar pattern, as you can see. But it is noted for that flag pattern, but it is pointed to the downside. And that's really one key aspect that we really bring up quite frequently in this class. And that is, how do we distinguish between the two? Well, what we'll oftentimes look at is that expectation that traders will get for those that look at it and utilize it, and that is the trend direction, right? What direction is the trend? Is the trend up? Is the trend down? If it's down, then we might look for those price patterns that are in accordance with the downward move, like a bear flag. We have head and shoulders as well that could be bearish as well. So those are some ideas, but let's take a look at the markets. Now that we've kind of got that in place, I like to go through this at least every 2 or 3 classes that we do, just to make sure everybody's on the page. As quick reminders what we're looking at for in this class with swing trading. So we'll pull it up right now. There is our market, and we're going to want to go ahead and take a look at the markets right now, folks. We brought this point up previously that we were in the possibility of an upward, well, really kind of an expanding sort of a triangle. And not expanding, but upward sloping triangle, as you can see right here. And we've seen this in this trend. And what's fascinating is you'll often get these same sort of price patterns that will keep coming up again and up again within the same existing trend. Now, it doesn't happen every time, but you can get this to occur. And we've been looking at this despite seasonality. We kept bringing this up and saying, hey, if we break above this level, we might be due for a breakout above. And we're still, I mean, to this point, we're kind of getting that, right? Right there within that upward sloping triangle, which is really quite strong. And you can see it unfolding here. Now, we'll see what does in fact happen. I do want to pause and just say one thing right now, and that is we do like to look at indicators down here too. Momentum, we do get momentum. You'll see this abbreviated by a number of technical writers, technical publications, and just traders. They'll just say, MOM, what's the momentum doing? Well, if we take a look at our high over here, and we compare that high to this level right there, let's go ahead and measure this over here. How are we doing? Price action, folks, we're doing great. We've gone up above our triangle, our upward sloping trend line, and we are at higher levels. This is a higher high point. How are we doing down here? No, it's downward sloping. So even though we have a high on price, we're showing weakness down here. In fact, if I just clear this off now and just kind of highlight this for you, see, it's kind of downward sloping here. So that would be kind of some indication that, hey, maybe there could be a pullback, but right now, we're just not seeing the strength, but you can't argue with price. And so price, oftentimes traders will say price is kind of king. You trade what you see, not what you think, but it is good to be mindful of other indicators out there so that you don't become surprised when something happens. In the back of your mind, you're saying, oh yeah, RSI maybe not as strong. It did bounce back actually recently pretty good, but hey, what other indicators are out there in case we do see a move down? We're not shocked, but steady as she goes right now. And if I were to do this, just real quick, because we do like to gather direction of the market, what direction is it going? Because it can give us insight into potential continuation of that strength going forward. Let's throw out a simple moving average. We'll just make it real basic. I know many of you use this, and some of you do use other moving averages, and I've begun to use one that we built code for within the ThinkScript class, which is a zero lag exponential moving average. I'm just saying there's a whole host that you can use out there. Those ThinkScripts aren't guaranteed for timeliness or accuracy. I thought I'd bring that up because, gosh, I mentioned it there. But yeah, just to highlight, it is something to be mindful of. But here you go. Real simple. We'll keep it basic for this class. Where is price right now relative to that moving average? It's above it. And let me just state this. A lot, and I mean a lot of price action can occur when you are above the 10-period moving average. Now, it can slow when you break below it or, obviously break sharply below it. But look over here. Look no further right there. That's a lot of price action right there. Now, we did break down. It was a little bit of a flag, but we bounced back up before we got into this additional triangle pattern. Now, come over here and take a look at this. Look at the price action that occurred below the 10-period moving average. It can be above, it can be below. All I'm trying to do is focus your attention. I know maybe you know this, but you know what? When it comes to price, like I said, some traders will say price is king. If you're going higher, it's inching higher. A lot of people were very skeptical about a bounce here due to the tariff situation, but we just continued to march higher. And those that stuck with that, had seen some strength there. All right. With, sticking with the trend. So there we go. Now, the one thing I did want to state too, and I noted this actually on an X tweet. I know Cam and and by the way, Cam did post that. I appreciate that. Follow Cameron at Cameron May CS. It's not Cam May. It's Cameron May CS. I'm not Michael Fairborn. I'm Mike Fairborn. So it's a little bit different. You got to get those titles correct. Cam did pin it to the top of the chat box there. But yeah, we do post things within that section and within X. And I just wanted to highlight over here for you, just a quick note. Gosh, I should have had this. I had to scroll down just a wee bit to find it. Oh, dang, I think I passed it. Hang on. Unless it didn't get reposted. No, 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 no. Okay, we got that. That's just an earnings calendar. I'm not seeing it. How strange. Okay, anyways, I thought I posted it in there. In fact, I know I saw it in there. Maybe it got erased or something, or when I took the pin off. But anyhow, um, we do have a Fed announcement coming up tomorrow, right? The FOMC was meeting today, and the announcement, what it's going to be, whether it's going to be a cut of rates or not, that should be tomorrow. Just the only point I was trying to make here, folks, when I bring that up, is this point, and that is that sometimes prices will run up to a news event, and then once the news event is announced, they come down. Just another thing to be mindful of here. I know there's always tons of things to be mindful of, but that's another one. Because sometimes, it happens with earnings. Sometimes stocks will run on the news and then they'll sell after the event. They'll run up to it. Well, there just happens to be a fairly big event. There's an expectation. Last time I checked, it was like a 90% interest rate expectation of interest rate cut. We'll see how that goes, but that's what it was. All right. Now, of a 25 basis point cut, 90+%. Those numbers can change, though, those expectations. All right. Well, let's get back now into, see how we're doing in the chat. Can you share the, oh, you know where it's at, Paul? That is right here. So I'll bring it up so you can see it. It's up top. So here is, I'll show you right where to find it. I'm not actually sure I can post it here because I haven't gone through the disclosures of it within the class, but I have over here. Here is, by the way, a list of our playlists. I'll go down to that ThinkScript class, so I'll make sure you can go down in a section. In fact, I'll highlight it because it's not so easy to see. This was just the newly coded up top here, newly coded zero lag EMA. We don't have this indicator on Thinkorswim, so it's one that I had to actually go through the process of coding and putting it in place. It's EMA is quicker, but this is even quicker than the EMA. It tries to cut out the lag. In many cases, that's just what it tries to do. It's also referred to as the Zlemma. I'll just post it here in the chat. There is the link, and I did mention where you'd find it at. It's in the description section down below. Yeah, I think I can just show you that. I don't think there's an issue showing that. I'll just pause this real quick, but you can scoot on down and just go right down here and click on more. And then, yeah, I have it down here in the description section. Okay. We built a scan for it as well, but I just saw that in the chat. Wanted to make sure I addressed that question. Zero lag. Okay. We good on that? And by the way, yeah, so that is specifically for the ThinkScript class. That is what I scrolled down to. You can find other classes in there. For this particular class, last week we talked about options, and you'll find that just listed right here as well for our options. Yeah. We just talked about options. And we're going to expand this out down the road, but nothing on options specifically today, although they could easily be utilized. I just want to spend more time actually on Fibonacci. So here is, well, I'll throw in the playlist here anyways, if you wanted to see any discussion. I know many of you do use options, but there you go. All right, there you go, Paul. I opened up a can of worms. I talked about it a little bit more, but there we have it. Okay, well, let's review our existing positions, and let's go through a few of these. We looked at, so this is Blackstone. Now, Blackstone, as you can see, you can probably pinpoint. I know many of you guys are very good at seeing these. You're great at technical analysis, and that's where price patterns are so nice. But you can see down here, big upward move, consolidation, breakout again. Now, we look to measure this flag pattern over here, and here is kind of the break to the upside. I think we're at maybe 3 points or so. The price target on this is still kind of steady as she goes right now. You'll notice I did keep the 10-period moving average on. When you start to break out, like we said, a lot of price action can occur under here. And if you guys are like me, I like price action just as much as the next guy or gal. But hey, it doesn't happen every time. But that's what we're trying to hit, is price action, that move. We don't know how the market's going to respond right now. And sometimes, as you can see, we do have a potential exit level in there based upon the stop. We read that in our disclosures, but also there is that 10-period moving average, and that can be utilized too as a potential stop, or exit. I shouldn't say stop, although it could be placed as a stop, but maybe a potential exit level. Let's say prices were to transition higher here, and then they break down before they hit the T2 target, and they break down there, and sometimes they say, well, I'll tell you what, I'm going to capture my gains because I'm not going to wait for a few more points up here because I think it could drop. Or somebody might take half the position off the table. In this case, that would be 50 shares, so you'd be taking off 25. But there are some ideas there. We did see a little bit of follow through, though, didn't we, on this BX trade? Broke above prior highs. We are doing okay in terms of the, no, well, actually not doing, we're not doing too, it's up on the up right now. We haven't gotten too much because I guess we did take our trade when we got that final confirmation, a little bit of a breakout trade here is what we were looking for. On this one, we didn't capture it down below. It was a little bit late to the game, but we have trades that are late to the game as well. We'll look at those, just the way a trader might look at them in these example trades. Up here too, quick note, that would be a T1 target. We have already hit our T1 target in terms of a bull flag. That target is to a prior high, and that's where some traders might choose to exit their trades. Others might wait. In this case, we got in after the T1, so we're just positioning it for a T2 target, and that T2 target is an expansion of this price range. Let me flip some colors here. So there you go. So this range up top, what we're measuring is this range off the bottom up to the top, and there you go. Or, like we said, if somebody tries to capture in gains or get out a little bit early, and exit with trading, and try to exit somewhere, if it breaks below the that moving average would be one thing. Another trade that we did, by the way, before I continue on, let me just plant a little seed in here for our discussion to continue, because this is really going to be the emphasis of our discussion after we get past our review trades. Look over here with me. I just went down here in the bottom right-hand corner of the screen. We're going to use this going forward right there. A good quick way to pull up our drawing tools. Let's click on it right now. And I'm going to click on the Fibonacci. And I'm going to click on the fibs. We'll pull it up to our highs here. And you'll notice something interesting. We came down and we bounced right off that 38.2. And we rallied on up. That was a Fibonacci number. Sometimes traders are really focused in on maybe the big three right there. 38.2, the 50%, and the 61.8 after they've already identified a stock with an upward trend and they're anticipating, the possibility of a flag pattern. Okay. Just wanted to plant that seed. I'm going to go ahead and go on to our next review stock because we have this one too. This is O'Reilly. And this one really had kind of a stronger, I'll pull it down a little bit so you can see the T2 target based upon the trend that we had. We're still continuing and we're holding, like right at the 10-period moving average right now. It's not unusual at all to break a prior high, come back down and test that high, which is also the 10, and to extend on up higher. We have made some gains here. Actually, this is the one that we're up on right now. This has 150, so we had an earlier trade in down here. We added a 50 to it, I believe. Yeah, and something like that. Anyways, we had another flag pattern right here that I know we traded specifically in this class, and we have our target up top. So this is the follow through trade, still kind of steady as she goes. Do you want to close out below the 10? Well, you could try to lock in some gains, or you could wait for it to kind of bounce, which is what we kind of talked about. But that, like we're saying here, we're just throwing out some example trades. All right, now the other one, and this is just still kind of steady as she goes. We're just going to leave this one alone as well. This one we got knocked out of on this particular trade. So our stop level did trigger, and this was the trade. You can see that a number of flag patterns right here. Now, last week we talked about this flag pattern not being actually as strong as some of the others, but we wanted to take the trade anyways. And you'll notice over here, we did break above the prior high. And we've we were looking at it and saying, well, okay, maybe it's ready to go. It moved above the 10 period, but then it broke down pretty sharply. And we did the trade, we did this exit just below the low. I believe that's one was just below the low of the entry trade itself. So we didn't want to risk too much because we said, and this is how a lot of traders will look at it. I know we did this for our example. I know we were saying, hey, if it doesn't go up from here, then what's going to happen? Because at least through this current trend, look at this. When we bounced, we continued higher above the high. When we bounced, we continued above the high. When we bounced, our expectation is to continue above the high like we did here too. But if that doesn't happen, if we get some of this kind of sideways action, where it's just sort of, meandering around, a little bit of chop and slop through there, and we just say, well, that's not what's been going on before. When it began to move, it broke out higher. And in this case, we put a very, very short leash on it, and voila. Now, I remember looking at that short leash, and just saying, hey, that might be a better idea in this case because the follow-throughs have been pretty consistent. And if it's not doing what we think it's going to be doing, that would be a scenario where we need to probably look at exiting fairly quickly. Now, what I'm going to do now is show you the difference in terms of the fib over here. Look at this. So if this was our little flag pattern right there, you'll notice something interesting. If I zoom in on this now, still kind of hard to see these red marks, but notice we did go below, even though we took this trade on, because we did break above prior highs. We went below a 61.8% number, which was right there on the pullback. That can increase the risk. And a lot of traders will say, if you are below the 61.8, there may be just a higher likelihood of the possibility of this trade not following through to a T1 or a T2 target, but instead continuing with this existing trend to the downside right there. Okay, it might come up. Notice it finds a little bit of resistance around the 32 and ends up coming down. Does everybody understand that, what we're going through right here on the Fibonacci's? On our last one. This isn't kind of it is an important concept to our discussion today because we might look at projection levels and magnitude of the run based upon a Fibonacci. And this was below the 61.8. This is a more intermediate term class, and so I haven't gone into the details of, what is a Fibonacci. And let me just state it real quick, though, for many of you, some of you that aren't familiar with it. But a Fibonacci just takes these percentages, and in this case, the market we use retracement levels of numbers that are found in the natural kind of universe. You'll find them with the human body, the Milky Way galaxy. You'll find them with the distance that tree branches branch out. They branch out at about a 61.8% number. It's fascinating stuff. But the market's kind of built of people too. It is, obviously. And because we have Fibonacci relationships within us and within nature, oftentimes traders might find these in the markets. And so that's kind of what Fibonacci's are, in a nutshell. But let's continue. So there was risk to that trade, and many of these, though, did go back below their 61.8. That was the trend. Ultimately, it failed us out here. Let's see, asking, is that a head and shoulders pattern on here? I'm kind of seeing one. Yeah, on a short-term basis right here. Faye is asking that right here and here. And hey, that's another thing. If the price pattern is too weak, you might start to find these I should say if the bull flag pattern is too weak, it pulls it down enough that, yeah, you might start to see these patterns unfold. And if that's the case, and we are looking at head and shoulders pattern, well, that would be the trajectory right there. Trajectory after you break that trend line, and the expectation is you take the distance between this high and this low in terms of the price pattern, and you measure that down. I'm just eyeballing it. So somewhere maybe in that range, question mark, is where it could be headed. All right. All right. So just looking for question marks as I go through the chat there. I think we're caught. up there. And let's go on to our discussion specifically. All right. So getting to that Fibonacci, I want to take a look at some of the areas that we have been seeing. Maybe the market, well, shows some strength in too. I like to go into that sector rotation grid. And actually, you know what? This was in, yeah, right over here. So looking at relative strength in the market, some of these areas are interesting. Notice over here with me, Infotech has been bouncing up relative strength compared to the S&P 500. Discretionaries have, communication services have, and we've seen a little bit off the bottom, which is interesting with energy. Let me pull up energy here and just show you. So this is a look at the crude oil futures chart, light sweet crude oil futures. And notice, folks, we're getting a little bit of a bounce off the bottom here, off a little bit of support. Now, there are a number of analysts out there that are suggesting we might see a recovery in oil prices. We don't know how high that's going to be, but there is a range over here, and that could influence some of these energy producing stocks out there too. For example, the one I wanted to look at, oh, we'll just go over here. Here is PSX. Let's take a look at PSX right now, and we'll highlight a couple of different scenarios. Okay, now on Phillips 66, if we do see some strength, which we have seen strength in some of the commodities, we've seen commodities really push up some of the mining stocks, gold specifically, and this gold and silver has added strength to maybe some of those areas. In this case, maybe, a crude bounce could be interesting here for these companies. Now, here is the flag pattern, the longer term flag pattern off the bottom here to the top of this range. Now, I'm going to dive into that Fibonacci and highlight something here for us right now. So here's the fib. We're back to it again. I'm going to draw this off the bottom, and I like to draw it actually. You can draw it from the bottom to the top or whatever. You can actually go to the top to the other direction as well if you wanted to. You can go this direction too. Not everybody does this, but this is a way to get projections to the upside. I was going to highlight some additional projections here because the problem with this is this is not a 61.8% pullback of this entire move. Everybody see that? That is a major flaw if you're drawing the Fibonacci this way. Instead, you have to, if you want to look at the pullback, this is a 38.2% pullback of the run itself. And where are we at right now? We looked at BSX. This can be an interesting level. Now, notice what we said before. If you break down below the 61.8, that could be construed as a negative sign. It stands to reason you are lower. And so this is how a bull flag can be defined. You're not closing below the 61.8 or even trading below it. In fact, many bull flags, at the very extent, the longest you let them go is maybe down to the 50% level. Okay? This trade, could it be stronger? Could we gain some additional magnitude here? The 38.2, that's a much, much more mild pullback. In other words, we are holding our gains on this run. We're holding the gains better than we would down at 50 or definitely 61.8 or even lower. Notice too, we're anchoring that support at prior existing support and resistance levels. There's a support level, which was also at the 38.2. There's a gap there. There's a gap here. There's a gap there to this top. There's a prior high right there. There's another, a prior low there. I don't know, how many did I just name there? I want to say maybe five levels that could be of interest there. The key point that we're driving at too is that it held up at a higher point and we had a fairly nice bounce here. Now, what's interesting here on this PSX, if that is a longer term price projected move, we can use another Fibonacci to help us out. You guys saw me make these projections to the upside to find that T2 target. We've already hit the T1 effectively right there, but the T2 can be used by another fib that's just to the right of this drawing tool, which are the extensions. Remember we said the full 100% retracement of the move? Well, click right here one time, click again, there is the pull of the move, and how do we get the measurement? We get it right there, off the bottom of that run, which is right at the 38.2. Voila. It does all the work for us. Where is our 100%? T2 target right there? T2, 100% of that additional pull of the move is right there. Now, what's a fascinating point here is the magnitude of that run potential, the potential for that run. Because we held it to 38.2, that could be an interesting number. This number comes up frequently enough. I've caught my attention. Now, nothing's 100% in the market, but it stands to reason it's a higher level of support. It could be suggesting more strength in that flag pattern or other patterns too that are pulling back just the distance of the run and holding at a higher level. We just might see more strength here. So, that may be a level to kind of park in the back of your minds. 38.2% Fibonacci. It's interesting because not only is it higher, but it's a specific number that we're holding at. And always look to anchor that too. Are there other levels of potential support? Now, we're not done with this because this PSX, not only we're going to put a trade on it, a paper trade here. Let me revert back to where we were before because I want to highlight another swing trade within the larger swing trade. And that's this right here. If I click one time, pull this guy. Pull this guy. Well, let's do this first. We saw the 38.2. I'm going to go back. We're just bouncing back and forth between fibs here. Back to our fib. Let's pull it up right there off the bottom. Click one time, pull it up to our high. My gosh, that's right. We hit the other next higher level, which is the 23.6. 23.6. Now, this could even be potentially even stronger based upon what we're saying because it's just holding more of its gains. These are based upon the strength of that flag pattern. We're just holding more of what we've gained, right? Here's your run up. Notice over here, folks, I'm hitting a higher level over here, and we're just still at it. Now, could this be on the verge of breaking out? If it is, well, we might have a shorter term flag pattern projection within the longer term flag pattern projection. There could be a couple in here. That other one brought us up to about 160. I don't think we're quite going to get there. But let me just show you what that would look like using our projections. So back to our drawing tool. We're very busy over here with our fibs, providing us all kinds of potential insight here. There we go. Click again. And where do we draw it off of? The bottom. Perfect. That big thick line, that's our 100. It's so hard to see because, yeah, it's tough. All right. Can we zoom? No. Oh, let me do this. Let me just do this. Instead of really trying to make this work, I think a 3-month chart might be a great way for us to really zoom in on this and see it better. And if I just pull it down now, there it is. There is your 100 right there. That would be your target. Now, that's a lot less than the 61 point, the longer term flag pattern, right? But now, could there be even further expectations of the possibility of a move? Some traders might wait for further indications, and they might say something like, well, Mike, yeah, it's a flag pattern. It's actually referred to as a bull flat sometimes. It's holding that higher. This was actually right, the 23.6, which is kind of crazy because here it is again, where we're right kind of pinballing at what? The 23.6 on the upside. So some traders might say, like, let's get above that resistance. Whatever that number is, in this case, it's another 23.6 just above it. But if we get above there, maybe that triggers both of the flags to start moving. It would certainly be further indication of it, you'd have to say, because you're breaking above resistance. Whether it hits there or not, we'd have to kind of decide. But look at this. We can actually keep a fairly tight potential exit down here in the stop that we discussed, right? No guarantee of exit at the stop price specifically, but potential exit there. Of course, those orders go to compete with other existing orders in the market, but I'm going to put it just below here. And it's about 29-ish for our trade. And our target's going to be, look at this. If we did 100 shares, could we do 100? Let me go back to our regular 6-month chart. Should do the trick. And it does. By the way, we don't want to forget our other indicators. RSI shown some, it's been moving up. Money flow clearly showing some strength as well. No real issues there in terms of people that utilize those. But you come over here, what is this breakout looking like? Coming up here. And let's go ahead and just we got to put the trade in early. We don't have to, but we don't have a lot of opportunities to do such in this class. I'm going to put it in right now. We'll do a one cancels other, maybe a long term and a short term trade. Anyhow, let's go ahead and put the trade in. I'll go right click. One cancels the other here. And let's go down here. Let's go to good till cancel. Good till cancel again. We'll keep it at 100. And this is going to be about 146 in terms of our target at the upside. And this is about 129. I'll have to move this up a little bit here. Let's hit confirm and send. But let's confirm the order here. Margin requirements. Where our bracket orders come in. I'll go ahead and hit send right now to put that trade in. Hopefully we get the fill on that quickly, but there you go. In terms of the stop, it was just below our level here. You could see a fairly tight stop, but target higher to the upside. Okay, that's one. There's our fill. Cool. All right, next one, INTC. We did a short put trade on this last week, but I mentioned, and that's just been collecting potential premium over the period of time. Unrealized gains, of course, unrealized income, I should say, unrealized income on that as we're going sideways. But we did say, hey, that could be an initial entry for the possibility of a breakout move here. Well, here's our fibs right down below. I'm going to click this. I'm going to click off the bottom into the top. And you can see something interesting happening here. 50% bounce from the top to the bottom. Okay. The next move up, the higher low, right at 38.2. Are we inching higher here? We're above the 23.6 now, which was resistance. And we're getting some indications of the possibility of a breakout. So in addition to last week's trade, let's go ahead and add in a trade here. Now, I'm going to put the stop below this prior low right here, which is about 23.80-ish. Okay, where's that target going to be? I'm going to use the fibs again. Come down here. We'll draw it off the high to the low. There you go, 100, real close to 30. Let's do 30 as a round number. Okay, so 30 is a round number. Let's right click, buy custom order. You can see that that was our other trade that we had in place, that option trade. But just set this up, good till cancel, a target. So the upside limit, 30. And this was what, about 28.70, 8.80-ish or so. Okay, we'll just do 100 shares here as well. Let's take a look at our order. Let's look at it and see what we've got. Still trading that flag pattern with that, respecting those higher Fibonacci levels. Buying power factor, the margin requirement, a lot lower here. As you can see, it's a $25 stock, not a ton going on in terms of, it's not very expensive, what I'm trying to say there, relatively speaking. And there you go. Oh, let's see, 20. Oh, I'm sorry, I was way down here. Yeah, our stop would be, oh gosh, what's going on? I said 28, my bad. All right, I've got to change this real quick. We'll go over here and in fact, let me do this. Let's cancel everything and redo that. I typed that in wrong. Okay, we were looking down here at around 23, 23.80, not 28.80. I was way off. Okay, 23.80. Sorry about that, folks. All right, back to our OCO bracket order. We'll start off with that one first, about 23.80. Right there, good till cancel. Good till cancel on our target. And the target was more like around 30. So you can see the potential reward risk actually quite higher. I'm going to go ahead and just put this in as a market, get this under our belt right now so we can get that trade on. And there it is. Okay, that's our second one we're going to take a look at today. Now, the last one is going to be right here. Now, I'm going to let you guys decide if you want to take a look at this potential trade. This is the little bit different. This is Qualcomm. Let's pull it up right now. I'm going to highlight this for us. I'm going to go ahead and click on our Fibonacci and off the fibs, the bottom right there. Look at that, holding at the 38.2. It was a pretty sharp spike back, wasn't it? A pretty good spike right there. And now we're just kind of inching above as well. And this might be on the verge of maybe a breakout trade too. Okay, so I want you guys to go ahead and take a look at this one, see if that would be a paper trade you want to take a look at, just kind of watch it and see how that unfolds there. This is a little bit interesting, more interesting one. I would say it was downward sloping trending. Wasn't a really strong trend to the upside, but more recently, it's begun to show some strength. You got the money flow kind of spiking over here as well. So we'll see how this ultimately unfolds. But if we were looking at this as kind of a longer term, kind of a pullback, a little bit of a swing, but it did have like that 38.2 within that range. A quick note too, just as I finish up here with that Intel right here. Intel is actually kind of on a sideways channel. It's been kind of in a sideways range here and just breaking out. So there are some interesting resistance points. We kind of maybe the stronger one that had a little bit more of the upward trend associated with it was PSX. But those were the three we did today, folks. Hopefully you were able to capture the patterns and the fibs as well. That was the idea. Folks, if you're getting value from these presentations, getting an idea on how to use the concepts we talk about today, it was Fibonacci. Maybe getting a sense of projections, where price could be projected with these price patterns, as well as magnitude levels. Give us a like. Lets me know that you like the presentation. It does help with the YouTube algorithm as well. I'd love to have you subscribe to our discussions as well under that Trader Talk that we discussed earlier. So right back here under Trader Talks, our webcast. Love to have you join us. If you're not already there, be sure to follow Cam and I on X, Cameron May, CS, Mike Fairborn CS. It's great being with you. Have fun with those fibs and see what you can get out of those. They are very interesting for making measurements and, like we said, potential magnitude projections as well. So with that, everybody have a fantastic rest of the day. See y'all next time.